Good morning, everyone. Welcome to the European Crossover webinar. And we do have some data that comes up at the top of this next hour. I just heard the guy on the squawk just going off some data, but I guess he's maybe just a recap. But anyway, nonetheless, we did have French non-farm payrolls coming at, that was about an hour and 15 minutes ago, coming at 1.6%. And then also French imports, 43.7 billion. And then we do have German zoo numbers. That will come up at the top of this next hour. They're looking for 45.5 on economic sentiment with current conditions at a negative 66. And then we do have Eurozone employment data. That'll be up once again at the top of this hour. This next hour, Q3, looking for down 2%. As we roll into the States, we will have labor costs at 8:30 Eastern, and that's going to be it in the U.S. data. Do have this NFIB business consumer optimism, but the labor cost review is going to be all of any real significance. That'll be Q3, looking for negative 8.9%. Take a look at where we stand here on the euro. Saw a little bit of a bounce here. We took a dip down here to 20.94. Thought we might have seen a little bit more. I did share this here in the chat yesterday morning. When we saw that bounce, and that was a very nice bounce we saw yesterday, I indicated, hey, we're just coming right back here to this resistance level. You can see right here, this 21.52, and they got above it, but they did not close above it. And I said, hey, well, that offers you, because I was saying about the NASDAQ, I go, look, I'm just waiting for setups. I go, that being said, that is a setup. You know what I mean? If you're looking at that, which is, there's 21.52. And from there, look, you can see it was just a steady downside progression from there. As a matter of fact, I even noted at the time, I go, well, they ran above it, but right now they're below 21.52. At the time, I think they're like 21.48 or 43. And then from there, you can see it was just a steady progression lower. And you can see on the 30-minute, we set up a little hammer, and we've kind of done another rebound. Immediate resistance would be right there, immediate 21.35, but this 21.52 is the key. We saw something similar also in the cable yesterday. We saw a heck of a rebound in cable. Okay, just said from the BBC, Boris Johnson said, just came across this squawk now. I'm always hopeful, but I can be honest with you, the situation right now is very tricky. That's from Boris Johnson. I just came across a squawk from the BBC. Boris Johnson saying, I'm always hopeful, but got to admit with you, the situation is very tricky. So anyway, so yesterday, you can see we talked about this on Friday. I didn't feel comfortable saying that was a gravestone to it. Yeah, it kind of sort of was. It was just the wick was pretty decent, but we talked about that on Friday. Hey, we've got this thing. It looks like, I think right here, we even said, I didn't like necessarily call it a gravestone doji, but it was essentially that setup. You can see here. Oh, wait a minute. I already did the one for today. So, okay, we'll get to that. But anyway, for Fridays, we had marked on this about this close we saw on Friday. And then you can see I wasn't up at the time, but when they hit the stops below 33.82, it really opened the floodgates. When we came on air, we were actually down here. I think we even pushed a little bit lower than that because I think I just said, well, we'll just go with the 32.48. Although I think we were just below it or something like that. Anyway, we saw a heck of a rebound. Look at this come all the way back. But even when we came back, and boy, did we come back a long way, I said, well, it's still left the 33.82, and you can see they closed just a hair below that, and we've kind of dipped back in very quiet trading. So that's where we stand there. We'll take a quick look at the Aussie dollar. UK Prime Minister, there may become a moment when a deal is not possible. Just came across a squawk. UK Prime Minister may be a moment where we get a deal and it's just not possible. So Aussie, it did pull back slightly, but it's still holding up rather well. PM, once again, you've got to be optimistic, but have to be something about being honest. It's looking doubtful. These are all coming across the squawk. Mm. There's another one. UK PM may come a moment where the Brexit deal won't be possible. I think it just said no separate agreement for fish. Anyway, these lines are coming across the squawk. I did post them, but they're coming across the squawk. So I'm trying to do the webinar and then kind of relay that same information to you. It says there are limits how far the government will go. PM. By the way, we're staying relatively quiet right now. You can see here after the huge move we saw yesterday, coming back from the depths. Holy smokes! Tesla at another high. Look at this. This is bananas. Long way apart on fisheries. Yeah, he said long way apart on fisheries. Anyway, but look at this. This is amazing. This Tesla. May come a moment when there's time to draw something. I don't know what, but I guess these lines are coming fast and furious. Let's look at the weekly chart here. This is unbelievable with Tesla because you saw this on a weekly chart. See that strong finish and then followed up last week by another strong finish, which came in line. It's actually 3 straight weeks. Look at this. 1 week here, we go from 409 to 490. The following week, from 507 to 584, and then to close on Friday at 609, which was 161%. I thought that we may have started the week out and maybe start to roll lower. The fact that we even added on more gas, and look at it, we are now, we closed at 648 here yesterday. So this is scary because now it's going to take it even further. And let's look at the after hours. Now, look at that. We close at the high, 649. Look at that. Now it's 661. Holy smokes. It's one of the reasons why I didn't even touch the NASDAQ yesterday. I was looking, I thought maybe we might be able to. Says we'll see where we get to in the next few days. I thought we might be able to slide back because so many of the other key stocks, although Apple, you can see it's here, it's higher. None of them are at all-time highs, with the exception was Google. He said it could go beyond what any sensible government could go, and people have to understand that. But so I thought there might have been an area for pause, and we may have been able to see that, but we certainly didn't see that yesterday. And we'll go now quickly to the indices. Try to tie these things together. So look at the move that we had in NASDAQ. Look at this. We'd already had this parallel line here. And then look, we took it even more narrow here. You see that? And we're still pushing up here. We almost made it up here to this 127% extension, which is of this high and this low. And with Tesla still going forward, the thing is Tesla has its inclusion into the S&Ps, and that inclusion will take place on December the 18th. So until then, PMs have to buy it. So the higher it goes, if they're waiting, they're forced to buy it. So it's just like, it's almost a self-fulfilling prophecy almost. And then one thing I noticed yesterday that they were referencing was that when you looked at the Dow, materials was down 3.75%, energy down 2.7%, financials down a quarter, almost a full percent. So we're seeing this in the Dow. We're seeing this move lower yesterday, but obviously the Nasdaq continues to power high. Also, the Russell was also doing very good itself. But I know they're thinking about this. Things can get better, the stimulus, but until then, things are getting pretty tough, though. And there's a lot of things that they're pointing to that I'm not sure that they're pricing in a lot. But that being said, I think the reason that the Nasdaq is holding up so well has a lot more to do with Tesla dragging it up here. Fortunately, I haven't stepped in the way of this, but I was hoping for a good setup and I didn't see it, unfortunately. And fortunately, I didn't stick my head in the news on a Monday. And like I said, there were a couple of minor dip backs, but nothing to necessarily hang your hat on. Bear with me. One more. Hang on. Okay, Stelios had just popped in. He was thinking there had not been any headlines, so I posted in the chat room these headlines that just came across the wires in the last 10 minutes or so. But anyway, you can see that the move that we've had here. Now let's go and take a look at the S&Ps. Let's see. So a similar move here. I don't think it's quite as strong to the extreme. It is just nearly as strong. That almost matches up, but I think that the NASDAQ, you take a look at this, and you take a look at the NASDAQ, you can see the NASDAQ has just a little bit more juice to it. Anyway, so let's go on and jump back. Well, actually, we can keep it on here, and we can go to the story because certainly those headlines kind of grabbed the news at the moment, although there wasn't that much of a reaction. But I think that has to do with more as to what happened yesterday. The market's a little bit tired, and I don't think people are willing to go in and jump in. That being said, the Aussie dollar, with me, the Aussie dollar slightly firmer on Goldilocks economy and Kiwi ticks down. The Aussie dollar was higher on Tuesday as the commodity-pegged economy recovers following its relative success in combating COVID, while its New Zealand counterpart traded slightly lower but still near recent peaks. The Aussie edged 5 basis points higher to 74.22. In Australia, a measure of business confidence and conditions followed a surge in November to above average as the second largest state of Victoria emerged from its lengthy virus-induced lockdown, and other states opened their borders to each other. The Goldilocks label is starting to look quite apt for the Australian economy, said Chris Reese. In general, our economy is faring a lot better than we originally feared. When the pandemic first started, we haven't seen consumer confidence this high for about 7 years, and we're starting to see business confidence and business confident conditions pick up quite rapidly as well. Jumping 9 points on November 9 November to 12, the National Australian's Index of Business Confidence has come a long way since hitting a trough of a negative 34 in April at the height of the pandemic and surpassing its long-run average as Australia reopened its economies earlier than expected. The recovering global economic growth underpinning the commodities, a soft dollar, and a highly accommodative monetary policy should provide support for the Australian dollar in 2021, with the Credit Suisse expecting to stay between 74 and 76 in the next 12 months. The New Zealand dollar was 70.33, fetching that on Tuesday, 9 basis points lower for the day, and short of a recent 31-month high of 71.04. So far, the pullback over the past couple of days appears to be only a mild correction to an uptrend that remains intact. Global risk sentiment has stalled for now, but the New Zealand commodity prices continue to rise and domestic economy remains resilient. And so pound on the defensive as Brexit deals talks go down to the wire. Britain's pound was the biggest mover in otherwise quiet trade among the G10 currencies on Tuesday, falling broadly as caution grew among investors awaiting the outcome of Brexit's trade deal talks that have come down to the wire. With only 3 weeks to go for the Britain to fully comply its exit from the European Union, leaders have failed to narrow differences on a post-Brexit trade deal. Investors grew increasingly jittery at the start of the week, pushing sterling to more than 2 cents lower against the dollar on Monday after news that PM Johnson would traveled to Brussels this week for what some said would be a last roll of the dice to secure a trade deal. Sterling has demonstrated there's been a shift in confidence surrounding a Brexit trade deal in the past few days, says Rabobank's head of FX strategy, Jane Foley, who noted the simultaneous weakening of the pound and increase in option volatility. Implied volatility in the pound, a measure of the future swings of the currency, hit 8-month highs, a sign that traders were bracing themselves for gyrations. The fact that Johnson will travel to meet von der Leyen later this week means that all is not lost with respect to a deal, Foley added. However, given the issue of fisheries and level playing field that have been in the spotlight for so long, it may be a long shot to expect that they can suddenly find a new single compromise on that. Elsewhere, concern at surging coronavirus cases in the U.S. and cast a shadow of ever optimism on vaccines and fiscal support for the U.S. economy, sapping bulls' momentum. However, there seems to be some fatigue setting into the upside momentum for the euro and Aussie fading somewhat. Any negative headlines may produce an excuse for a risk-off tilt. Well, there we have it. And with that, let's go on moving to the analysis. Okay, let's start up with the euro. So after paring back below 21, the euro rallied back to 21.67 before sliding back below the resistance level of 21.52. Let's go bring this in light. There we go. There we go. Makes it easier to see it with the 30-minute. So as I said, after paring back below 21, the euros rallied back to 21.67 before sliding back below the resistance level of 21.52. Resistance for Tuesday will be the 21.52 with support at 20.51. So. And you can see how they got back above that 21.52, but they couldn't hold it, and they ended up closing the 30-minute just below it, getting which I shared in the chat room, which there you've got a setup, and at that point, we did go on and eventually slide. Did it hung around there at the highs, though, for quite a while, eventually succumbing to a move down here to 21-ish. Looks like made down to what, 21.03 before we kind of rallied up a little bit and we took this quick drop below 21. Let's go and move on to the cable. We saw a heck of a move back here on the cable. Take a look on the daily for a little bit better look-see on that. Boy, what a heck of a move. And boy, everything all went to heck once they took out 33.82 early yesterday, and then we dipped all the way down here, sub 32.48. We actually had the 32.48, but this was after the fact. We were actually below it. Remember when we were on there? I think we were like in the 30s, and I'm like, well, I don't want to say, oh, that's the low there, but we'll just go with the level. Even though it was actually above the market at the time when we did the analysis, said, well, we'll hit 32.48. I did not think this thing was going to turn around and rip all the way back. But in the end, it was not able to hold that 33.82 on the close, and hence we're a little bit lower here. So cable took a hard slide on Monday as stops went off as the pair took out the daily level of 33.82. Then the pair rebounded to 34.05 before sliding back below 33.82 on the close. Resistance will be 33.87 with support at 33.01. On to the Aussie dollar. The Aussie saw a mild slide on Monday, but managed to recover above 74 cents. Resistance on Tuesday will be 74.50 with support at 73.33. And this 74.50 held pretty much like a rock. We had that as our resistance yesterday, and the market, we were much lower, not a whole lot lower, but we were low. I think we might have even been below 74 when we did the analysis. And then we came up here, and I think the high was 52 or 53, and then we pulled back. Not a whole lot, but we did pull back some. So 74.50 will still remain the resistance from yesterday, which did a pretty good job of capping the highs, at least for now, and support at 73.33. I don't know if it'll make it down there, but that's where we have it. If we get a slide, doesn't look like it at this point. Because as I keep telling people, for nearly 10 days. If you want to know what's going on with FX, look at U.S. equities and primarily focus on the NASDAQ. And that's what's happening. On to the Kiwi. So the Kiwi closed slightly lower in a tight range. Resistance will be 70.77 and support at 69.67. So the only difference is we increase this to 70.77. That's the only difference. Moving on to the dollar CAD. The dollar CAD finished in the week at new lows again. Weekly support now is at 27.38 and resistance will be 28.36. So no real big change. 27.38, 28.36, no changes there. I think that I had put in extra notes. I don't know why I didn't save it, but if I remember correctly, we just kept it the same. So I don't see any reason to change it. On to the dollar peso. Dollar peso closed Monday at weekly level of 1988. Resistance will be 2004 with support at 1975. On to the dollar peso. The dollar yen. There was no changes here in the dollar yen. You can see here we still did a whole bunch of nothing. So it's going to be 364, 452, no changes. On to the cash dollar. The dollar index posed a week higher close on Monday. Resistance on Tuesday will be a 91.42 with support at 90.28. And that's probably being too generous, but the 91.42. On to the Kiwi yen. No changes here. Look at this on the QEN. After trading and finally dipping back, we are just trading in a very tight range, the same as yesterday. No changes, 72.77, 73.71. So no changes. On to the euro pound. Well, we did see a pretty good little rally yesterday, and look, we've kind of kept ourselves in check right here. And you can see how we close. So support's going to be the body right there, which is 90.17. Oh, that's what we had, the 90.17. And resistance would be this body right there. And that would be 91.06. On to the euro odd. Well, we kind of pushed on either side, but we finished towards the lows. So we would want the support if we were to break some stops, would come in here, 62.49. And on the upside, the body closed right there, 63.68. Onto the Euro Kiwi. No changes from here. Look how close that this range was right there. So no changes. We'll keep this pretty much in check. Stay in just stymied. Probably will be open to paring back a little bit. But if we do hold here, Kiwi's holding steady. The euro has come back. I think it's just a matter of pushing stops on either side. So we're going to leave this as it is right now. 71.24 is a little bit low. But yeah, that's what we take if we go with the stops. And on to the Aussie yen. No changes here. Look at this day here, yesterday. So a very tight range, no changes, just kind of holding steady here. And onto the guppy. Did see a pretty good little pullback here in light of what happened with sterling. Testing on the downside. We're staying in a very tight range. It's going to be right there for support. Right there, 38.37. And on the upside, the bottom part of this body, 39.56. And to the sterling odd. Pretty good little pullback here. Support's going to be right here, the body touch here, which is going to be 79.20, which we did already have that. And on the upside, if things get turned around, and they are pretty weak right now, we're just going to go with this level, but just a hair above it where that body is, which is 80.51. You're kind of holding its own here. After that little bounce back, and I just told you that I said looking at it straight up would be right there at 21.30, 21.31, and that's where they ran out of gas. So I just went with this body touch right there. Thought I might have said 35, but that's where the body touch is, 21.31, and the high was 21.33. But just said the immediate resistance, if you're trying to scalp, would be that body touch right there, 21.31 so far. The high is 21.33, and we're now at 21.25. And then looking at cable real fast. Pretty much dead in the water. Despite the headlines, we're not going anywhere. I think yesterday's crazy range was just too much for the market, and they're just not messing around with it. Look at Tesla and the after hours. Look at this. This is just bananas. 669. We're currently at 667 right now. Look at that. Look at this. On November the 16th, it was trading at 411. Look at us now. I can open it up for you. Look at this move. As long as it's doing that, it's dragging the Nasdaq. It's not dragging them up in the sense that they're all, but it's keeping it from pairing back. You know, we're seeing this slide back. Put a better perspective. We can put it on a 2-hour chart. Look at this. Unbelievable. Look at that. It wasn't even just 3 weeks ago. It was trading at 402. Look at this thing. Now it's 665. And if you look on the thing that is scary, and I go, man, I do not want to stand in the way of this thing, because it's holding the bid up, even though the rest of the FANG man, with the exception of Google, are not at all-time highs. But the Nasdaq futures are all-time highs. But if you look at this on a weekly, look at this. Look at this week's performance from 3 weeks ago. We take it from 400, well, right here, 402, like I told you, to close at 487. Okay? Then 2 weeks ago, we take it from 500 to close at 587. Then last week, we dipped sub 550 to 541, and we closed at 609. I'm like, wow, look, we've got a hanging man. We also did the 161% extension. That might be it right there. I'm saying, let me watch to see how this first hour of the cash equity goes. And look at that. We just added on to it. And look yesterday, 648. Now look, pre-market, 666 with a high of 669. I mean, until it pulls back, they're just letting it ride. There's no reason to until you see a pullback. Now at this point, on a 30-minute, you'd have to get below 641, and realistically, you'd have to say, and yesterday I said it was 541. You'd actually have to get to 541 in order to claim a true reversal. So now if you look on a 2-hour chart, you have to take this area out, 584, just to say, that wouldn't even call it a sell. At 584, you'd have to say, okay, now you'd have to go neutral now. That's how crazy this thing is. It's dragging the whole complex to a certain extent. So you can see here, Apple looks strong, but you see, it's not at all-time highs, and I pointed that out yesterday. And look at Microsoft. It's doing better, but it's not at all-time highs. You see that? Amazon. Look at that, 31.55. That's $400 below all-time highs. You see what I'm saying? But the Nasdaq futures are at all-time highs. It's it's Tesla that's dragging that up. Look at Facebook. We did push higher yesterday. One of the reasons it kept me from trying to sell futures, even if I saw a dip. I said no, I have to see the real McCoy before I even go there. And look at now Facebook doing better, but it's not at all-time highs. Same thing with NVIDIA. You can see the impact that Tesla's having. The only one at all-time highs uh, has been Google. You see that went. Now, we did have a Greystone Doji, but we were at all-time highs. And you can see here, that's the only one that's at all-time highs. So anyway, that's where we're at. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.